All right. I'm J-Rod and welcome to Stocks That Rock. Each week I turn up the volume on a breakout stock that will rock your retirement account. Stocks and cryptos have gotten rocked on COVID concerns and the threat of rising interest rates, but there are plenty of good-looking opportunities out there if you know where to look. And I'm going to share a little secret with you. One thing I like to do when there's a sell-off is run a screen for stocks making new 52-week highs. As a trader, this tells me where the strength is, and I'll often find big breakout names among the list. And breakout stocks that surge during sell-offs often continue ripping higher when the rest of the market recovers. I ran that very screen this week, and today I reveal the top 3 names for my screen that should not only survive the sell-off, but thrive on the rebound. So first up, we've got CSX Corporation, ticker CSX. They're the 3rd largest American railroad company on the market at $79 billion in market value. CSX operates nearly 20,000 miles of railroad track and hauls freight to 23 US states and 2 Canadian provinces. And since the end of the Great Recession, it's been one of the market's best performing stocks, up more than 13x. Now, what I love most about CSX in a fundamental sense is that there's a strong moat around their business. Pricing power for railroad companies will remain strong for the next 12 to 16 months as businesses around the country restock their inventories of goods that rabid consumers are after, especially ahead of Christmas. CSX just broke out of the range it's been trading in for the better part of 2021. You see here this $5 range between $34.50 and $29.50. And my price target on the stock is $39.50, which is the $5 range added to the breakout point. That's an upside for you of 14% from where the stock broke out this week. And if you love income, the stock sports a dividend yield of 1% along with its killer growth potential. Next up on my list, we've got CenterPoint Energy, ticker CNP. They're a power company headquartered in Houston, Texas, serving up natural gas in the southern United States. In addition to their regulated power business, they have some 77,000 miles of natural gas main lines, and they've got 264 miles of interstate pipeline between Louisiana, Texas, and Oklahoma. After several months of trying, CNP finally broke out of its sideways trade this week in a big way. No surprise here, energy prices are on the rise ahead of the winter season, and that's great for CenterPoint's midstream oil and gas business. Now, you've actually got 2 really attractive bullish trading signals here. A breakout from the stock's sideways range and a breakout from an ascending triangle pattern. First, you've got a $3.50 range here carved out from $24.50 to $27. Slap that range on top of $27, that gives you $30.50. That's my first price target and represents an upside of 13% from the breakout point. And looking at the ascending triangle pattern, you've got the low carved out in March around $19.50, and the top, again, here at $27 being decent resistance. But you see really good support here along this trend line through the last 4 months before the final breakout this week. I love ascending triangle patterns because the pattern shows you a stock has eager buyers on pullbacks. And when a stock does break out of this pattern to the upside, you often see that point of previous resistance become strong support. My longer term price target for the stock is $34.50, which is the $7 triangle range added to the $27 breakout point. That's an upside of 28% from the breakout level. And for your trouble, like CSX, CNP pays a very nice dividend, yielding 2.5% on top of the massive upside in this power company. Last but not least, we have Tri Pointe Homes, ticker TPH. They are a California-based builder of single-family homes. They've got operations across the West in California, Nevada, Washington State, and Colorado. On the East Coast, they've got ops in both Carolinas, Maryland, Virginia, and the District of Columbia. And you know, We've been hearing about inflation and rising interest rates taking a toll on the housing industry. I'm just not seeing that when you take a look at this stock. Shares are up 50% over the last 12 months. And just in the last month alone, the stock is up 10% compared to a 2% drop in the S&P 500. And right now, it's breaking out big amid the sell-off in the market. Shares just smashed through the ceiling at $26, and like CNP, TPH has a nice ascending triangle pattern here too. My price target for TPH is $32, which is the $6 range between $26 and $20 added to the breakout point at $26. And from the breakout, a move to my target at $32 is an upside for you of 23%. And if we zoom out just a little bit, you'll see $20 has held as support for shares of late after being pesky resistance over the last 6 years or so. So you've got a really good launch point from $20, a rising line of buying pressure and support, and additional downside protection potentially at $26, as well as the 50-day moving average, which is the red line on your screen here. So to sum up, yes, things are still a little nutty in the markets, but the three names we looked at today, CSX, CNP, and TPH, are standout stocks that are thriving in resilient areas of the market. Freight shipping, power utilities, and a home builder in a still hot housing market. That's all for today, but as always, if you dig the content, please hit the like button and subscribe to the Rich Retirement TV YouTube channel so you never miss out on my videos. And if you've got a question or comment, leave a comment below this video or shoot me an email at askjrod@stpaulresearch.com. I love hearing from you. Thanks again, and for Rich Retirement TV, I'm J-Rod, and I'll see you next time.